Well, hey guys, thanks so much for tuning in. Obviously, it's been a difficult week for freedom. If you take a look at the Scottish referendum and the vote rigging, it's been a difficult week for precious metals. It's been a difficult week also for those who believe in the precious metals story as a hedge against tyranny and a hedge against financial fascism. We have on the line our friend Dave Kranzler from Investment Research Dynamics, and our good friend Rory is also joining us today. Dave, how are you?
I'm well, thanks. Thanks for having me. It's love talking to you guys.
Thanks for joining us, man. And Rory, how you doing today?
I'm doing well. Thank you, Sean. Hope you are.
Yeah, I'm hanging in there. You know, fellas, as the silver gutting was happening yesterday, guys, we're recording this on Saturday. On Friday, as everybody knows, silver was just gutted once again. And we'll have to wait for the forensics on how much paper was sold into the market yesterday. Dave, maybe you can weigh in on that. I'm not sure what the numbers are just yet, but I was feeling exasperated, dismayed, angry, and at one point during the day resigned to our fate, which is this. The cabal is trying very hard to essentially demonetize silver from the minds of human beings. They want it to be such a tumultuous, nasty, worthless, quote-unquote, investment that nobody wants to touch it or get near it. And they knocked the price down to $17.79, and I usually buy every 4 to 8 weeks some more silver. And yesterday I bought some when it was down 54, 55 cents, and an hour later it was down 75 cents. It just kept falling, and I felt resigned to my fate, which is they could take this thing down to 10, they could take it to 5. Brother John has made the point they could take it to 0. Big Swear said the same thing. So who knows where they're taking it, but they've certainly taken it well below the cost of production, and it's very exasperating. I just thought maybe we should talk about the emotions everybody's feeling and then try to realign those emotions against fact. Dave or Rory, weigh in. What's your guys' take on what went down on Friday?
Rory, I'll start off if you don't mind. What a lot of people are kind of overlooking here is that this what's going on is happening strictly in the paper market, and the physical markets in the East is a completely different story. I mean, Shanghai's been in backwardation. The Shanghai Futures Exchange, silver's been in backwardation 7 to 8% all summer long. And what they're doing is they're using the COMEX and the London paper markets to conduct a psychological warfare. I mean, look at how despondent everyone is. These attacks on the metals only occur when the fraudulent paper markets are open. I mean, it's being done with paper. Every morning I wake up and the first thing I do is I look to see what happened with gold and silver with my futures software overnight when the Asian markets are open, Asian, Indian, basically the Eastern Hemisphere. And those are where your physical markets are now. And every single night, for the most part, it's not 100%, but it's pretty close, gold and silver drift sideways to higher up until 3 a.m. East Coast time, and that's about when the Shanghai market winds down, and that's when London starts opening up. And once Shanghai closes, you're basically the only trading that goes on in the world is paper derivative trading. I mean, London's still referred to as a physical bullion market, but it's not. The outstanding amount of paper claims issued against metal that's held in London vaults is, I mean, the estimate's been 100 times. It's probably even greater than that when you count the leverage involved in derivatives. But LBMA forwards there's really not a lot of difference between those and COMEX futures. And they can, as long as no one holds their feet to the fire on delivery of physical, they can print up as much paper as they want and sell it into the market. It's artificial supply. And so what happens is, I mean, it's like I said, it's over 90% of the time the metals rally during Asian trading hours because they're over there assiduously buying physical bullion, gold and silver. And then it gets hit when London opens, and then London hands off the ball to New York, and then it really gets annihilated. So that's one thing people have to keep in mind is that this is being done by paper. And what's interesting about what you said about, you know, everyone making these comments, well, they could take it to 10, they could take it to 5, they take it to 0. I assume you guys were around in '08, but a lot of people who are in this market now weren't around in '08, and back in '08, there was a takedown that went on that was equally as vicious as we're seeing now. It just happened in a much shorter period of time. And I remember thinking gold and silver bottomed out toward the end of October that year. And I remember sitting there watching them just completely decimate silver in late September, early October. And silver had ran up to 21 in March that year, and they had banged it all the way down to 8. And I remember thinking the exact same thing. Nothing's going to stop JP Morgan from using paper to take silver to zero. And literally within a couple weeks after I was in total despair, boom, gold and silver took off, and they started gold ran up to an all-time high, and silver came close to an all-time high over the next 3 years, basically, 2.5 years. So, and the other interesting thing, and I pointed this out to Bill Murphy yesterday, I sent him a graph of this. If you look at a 14-year daily graph of silver, that's what I had up yesterday, and you look at the chart pattern that occurred in '08, that it basically occurred from, say, February through November that year, and you just zero in on that, and then you look at what occurred from, say, 2010 until now. You're looking at basically the same chart pattern. It's just it's unwound over a 3-year period this time versus essentially a 4 or 5 month period in '08. And so, yeah, while it's possible that in the very short run they could do anything using paper, I don't see how they can get it much lower than this, because at some point the silver mines are going to shut down. And you have to remember, I mean, half of the silver that's produced, or more than half, is used for industrial purposes, right? So those are users that have to have silver. So you can't have silver production just being shut down. And the other thing that's going on, and it's kind of overshadowed by the gold issue in India, is that India has been importing by far a record amount of silver this year. So in my opinion, I think that the availability of physical silver for them to keep perpetuating this game, because even though investors in the U.S., other than Silver Eagle buyers, the large investors who trade on the COMEX, even though they don't stand for delivery, there's a whole Eastern Hemisphere of a few billion people that do stand, and they demand delivery. And so at some point, the West has to cough up silver to deliver into Asia and into India. And I think that's what puts a floor on it. So, and I think we're there because we're well below the cost of production now.
I want Rory to jump in immediately here. I just wanted to note that, as we've talked about many times, the silver supplies at the Shanghai exchange, the physical silver supplies have been depleted by 90%, as we've talked about time and time again in these interviews, based on the work of SRS Rocco and Koos Jansen and others have pointed out that the physical metal is being taken off the market in Asia. And so my exasperation comes from the fact that it's, I guess, these silver fix people in London, the new silver fix, which we can talk about, versus the Shanghai exchange. And it's this battle, this paper battle. And the paper market, the paper price hasn't seemed to turn around. It's only getting worse. It feels to me like this situation in the pricing is only getting worse. And it's hard to understand. Rory?
Well, there was, and I can't remember who it is, and I apologize for that, but there was a video that we posted there at SGT Report a couple of days ago, and the gentleman had done some analytics, or he had analyzed Pan American silver mining for going back to the last quarter of 2013 and then the first 2 quarters of this year. And their all-in cost was $20.13 an ounce for silver. And that's a dedicated silver mining operation, is my understanding. And as far as the beatdown that's going on right now, I'm ecstatic over it. I mean, personally, because I know I trust what Dave says. I trust what SRS Rocco, his analysis says. I trust Koos Jansen and his analysis. And I believe that the Chinese, the Indians, and the Russians are taking every single piece of gold off of the market that they can get their hands on. So therefore, I'm looking at private metals right now, and they have Eagles right now, Silver Eagles at 2107. Okay, that's incredible. And I also pulled up SD Bullion and looking at they've got the silver Canadian bald eagle at $20.85. I say take it to zero, please. Take it to $5. That's just where I'm at. I want it to go down. And Brother John F. was saying that it was going to 15. And Silver Doctors this morning on Saturday was saying that it possibly going to 15 as well. So I mean, if it goes to 15, I am definitely backing up the truck because I know in my heart of hearts that the silver and the gold are all running out, and the only physical metal that's left is primarily going to China, India, and Russia.
Yeah.
And I want to get as much as I can before they get it all.
Yeah, and just to piggyback on what you're saying about Provident Metals, that's where I made my purchase from yesterday. And of course, as soon as I put that order through, the price fell another like 23 cents. But, the reason I feel exasperated, and I understand your excitement, is, and I want to, well, I do. I mean, you're being very pragmatic, and I think most of our audience at this point, most of the listeners are very pragmatic. But these guys win every time they're at bat because they cheat.
They only win if they can keep this thing down forever, right? And I've been discussing the situation in silver with Bill Murphy for quite some time. He used to be a copper trader, and he knows a lot about metals trading and a lot about futures. And he's been looking at the open interest in silver, and the buildup in open interest in silver contracts in the COMEX for the last maybe year, 18 months has basically defied the open interest pattern of silver for the first 13 years of the bull market in the precious metals. And that is to say that normally the open interest, the level of open interest varies directly with the direction of the price of gold. So when the price of gold goes up, the open interest goes up. When the price of gold goes down, the open interest goes down. It slides with the price of gold. Well, this last time around, ever since gold, they started taking silver down from 49, the open interest was basically staying about where it was. It got up to like, I don't know, 170, 180,000 contracts at one point. And then as gold was trading down through the 30s and 20s for the most part, it stayed around between 130 and 140, and that was highly unusual. So Bill and I used to go back and forth discussing the significance of it. And now with under 20, the open interest is back close to its all-time high. So it either tells you the degree to which the bullion banks on the COMEX, JP Morgan, HSB, and Scotia, it tells you how much paper they have to print in order to keep a lid on the price of silver and take it lower. Or it tells you that there's someone who's taking a stand and accumulating a big position, and they don't care how low it goes. They're just going to keep buying paper. And I don't know which one's right. We'll find out over time. But certainly the open interest in silver far exceeds the amount of silver that's being reported in the daily inventories as available to be delivered. Mm-hmm. So, for instance, if someone, this is off the top of my head, but I was just looking at it yesterday, if everyone who's long silver, the December silver contract stands for delivery, you basically have about 128 million ounces worth of contracts open for December, and in the latest inventory report, they show only 64 million ounces available to deliver into those contracts. So that kind of gives you the scale of just how out of balance the paper open interest is on the COMEX with the amount of physical inventory that's being reported. Now, I want to emphasize being reported because if you investigate how those inventory reports are put together, they're essentially just computer-generated reports that come from the banks themselves. They're not audited. They're not independently audited, and there's no one there to verify whether or not those reports are bona fide. And I've always said I don't trust those reports. I think there's a lot less silver and gold in the COMEX vaults than they represent that there is. And the fact of the matter is, if those reports are actually honest, it would be the only financial reporting in every aspect of these banks' businesses that they do honestly. And what are the odds of that?
Yeah, impossible.
That's you're talking about Powerball odds there of that being the case.
Yeah, and I just want to talk about how recently we all momentarily got excited when we heard about the end of the London silver fix, but then we all, of course, got slapped in the face with a bit of reality when we found out HSBC and other criminal banks would be involved in the new silver fix, which is just a computer fix. And Rory, did you say it was Pan American Silver? Their hard cost is around 20?
Yes.
Yeah,
it was
Pan American.
2013.
Okay. Yeah, and, just recently we posted a piece that Forbes ran with here. The CEO of First Majestic Silver, Keith Neumeyer, talking about the silver fix, and he says, and I quote, "Anytime you have a small group of people fixing a price, it's prone to manipulation." He's talking about the new silver fix. "There's no change from how it was done before to the way it's done now. It's just a different group of players, and now they do it on a computer." End quote. And, this is a CEO who I'm sure is exasperated, because then he goes on to talk about how could we arrive at a more fair silver pricing system. And I don't even know what the answer is at this point, Dave. What is the answer? It appears to me these criminal banks are going to stand in the way of the honest pricing of silver and gold forever. And I know that I think our collective take is that it's going to be up to Asia to change this paradigm. But yet then on the new metals exchange that just went live this past Thursday, we see these same criminal banks as partners participating in the new metals exchange, HSBC and others among them. So is this ever going to end? I mean, literally, are we going to still be having the same conversation 5 years from now?
Well, first off, I never got excited when I learned that they were going to replace the silver fix, because I knew that whatever they replaced it with would be just as bad, if not worse. But then they could announce to the world, see, we fixed it. But if you read through the details of how the new fix works, it's even worse than the old one. So, the London metals market is more corrupt than the COMEX. It is equally corrupt or more. I mean, let's face it, it's been around longer. It probably taught the COMEX how to be corrupt. So I was never excited about that. But the point that you bring up about the same bullion banks being involved in the new Shanghai exchange, that one kind of threw me for a loop when I saw that. And I don't really know what to make of that yet. What I'm waiting for, and Kuz Jansen, in his latest post today, said that they've finally released the rule books for how that exchange is going to operate, and he's sifting through it. So I'm going to wait and see what he has to say. But I've always been watching that, and everyone's been kind of excited about it. And my whole thing has been, well, wait a minute, let's wait and see if they're going to have the ability to issue paper contracts in excess of the verifiable amount of gold that's on the exchange to deliver if people decide to stand for delivery. In other words, I want to see if it's any different than how the COMEX operates, or if there's actually going to be checks and balances between the amount of paper outstanding and the actual amount of physical underlying.
But don't they have that in place right now?
That's the Shanghai Gold Exchange. This is the Shanghai International Gold Exchange that operates in that free zone, and it's a futures oriented exchange it settles in the Chinese yuan. It's a yuan settlement contract. I don't know if the rules of the exchange permit a fractional system to exist. Do you see what I'm saying?
Yes.
Right, and we're talking about the new international bourse that just opened on Thursday,
Yes.
11 days ahead of schedule. Okay.
Yes, correct.
Yeah, and that's what's confusing about this, because, of course, we were all excited about the Shanghai Gold Exchange, which does every day settle in physical, which is what Rory's talking about. But now you have this new entity coming online, which is, again, dealing in futures contracts and really paper games, which is cause for concern.
That's right. The Shanghai Gold Exchange itself, the physical settlement exchange, I'm not aware that the Western bullion banks operate on that. I think where they've all been invited to operate is this new exchange. Well, the Shanghai Gold Exchange, there's very, very strict and definitive rules regarding how that thing operates, and it's highly controlled by the government. I mean, it basically is an extension of the government, and I think that thing is physical in, physical out.
Mm-hmm.
Yes.
So this new exchange is set up. It's separate. I think it kind of maybe links the two, but and I don't even know that because I've been waiting to see exactly how the rules are going to be set up.
Okay. Well, guys, if we could, I think it would be important to just touch on this new piece from Steve St. Angelo, our friend over there at SRS Rocco, the chart every silver investor should see, because, maybe it's time to talk about, again, the reality of the situation, which, as Steve points out in this great chart, the total U.S. Silver Eagle sales versus SLV inventory, he writes that the total Silver Eagle sales since 1986 is at 388.3 million physical ounces, which surpasses the total inventories on the iShares SLV ETF. So what I like about this is that he is showing us in this chart that the physical demand for silver in the real world outweighs the paper demand for silver on Wall Street. And so he's saying silver eagles are not sold for melt, but they're sold back into the retail market to save. Even if 10% were melted, it would still be 350 million ounces, which is more than the quoted total inventory of silver in the iShares. And I've always maintained, Dave, maybe you agree, and Rory weigh in, that the SLV is fraudulent anyway. They don't have some magic vault with 340 million ounces of silver in it. There's no way in hell I believe that to be true. What do you guys think?
Couldn't agree more.
I actually glad we're talking about this because this has been I've had this bone to pick for quite a long time, and if you read through the prospectuses of GLD and SLV with a fine-tooth comb, which I've done several times, there's no independent mechanism by which the amount of gold being held in either trust can be independently verified. And they've been set up kind of in a sneaky way with the legal language that such that they can actually lease their metal out if they want to, even though they'll say right in the prospectus that they can't. Because what they've done is they've set up the ability to keep metal at what they call sub-custodian. So like with SLV, JP Morgan, not coincidentally, is the custodian, but they can use sub-custodians to keep the metal. And while the metal is sitting at the sub-custodians, JP Morgan has no legal liability as custodian, and the trustee has no legal liability for that metal. It's astonishing how loosey-goosey the legalese is in these prospectuses. And the other interesting thing about SLV is that, I forget what year it was, I don't know, maybe 2010, they changed the prospectus so that they could keep silver that would be counted towards SLV, the SLV trust, on the COMEX and in London. And the obvious reason for that was so that they could move silver around between New York and London as needed when they needed to access physical silver, either to deliver into the mint or deliver into industrial buyers or what have you. Both GLD and SLV are definitely frauds, and there's no way the amount of gold or silver that either trust is representing is in the vaults, it actually sits in the vaults. What really ticks me off is that Ed Steer promotes this guy that he calls the Silver Bar Guru, who has this stupid computer list with the serial numbers of every single bar, and he runs it through some program so he can track supposedly what the serial numbers of bars moving in and out of the trust. Well, again, he's never seen the bars. He doesn't know that the bars are actually there or whether or not they're really being moved in and out. All he does is he's taking paper reports that anyone can get from the SLV website and running them through his computer. And it actually just, it sort of adds another false layer of credibility to the trust.
Right.
By giving this guy credibility as being the guy who can track bars moving in and out of the trust because he keeps track of the serial number of every bar that they publish. Well, big frickin' deal. Yeah. I can make up a list with silver bars and serial numbers on it and put it on my blog. Does it mean those bars exist? No.
Right. That would be like trying to track, serial numbers, certificate numbers traded daily on the stock exchange to ensure settlement. I mean, it's not really possible. There's no way. You're trusting the numbers. You're trusting numbers from the criminals.
You're trusting the bank reports. What I would like to do is get this guy in a room and say, okay, pal, why don't you go over there and knock on their door? And I want you to correlate every single bar in their vault with the serial numbers on your stupid list.
Yeah. We've all suspected for a very long time that SLV and GLD were solely created as a mechanism to control the prices of the precious metals, as a mechanism for manipulation. And for anybody who has SLV shares or GLD shares, if and when this stock market, if and when this paper Ponzi melts down, those people are just unbacked creditors. They're going to be standing in line because we've all said for a very long time, if you don't hold it, you don't own it. And that's the bottom line on SLV and GLD. And then add to the fact, which you've hit on, the custodians for each include JP Morgan and HSBC, two of the biggest criminal banks on the planet. And you don't need to be, Inspector Clouseau to figure out that these are not trustworthy avenues for investment. But I'll tell you what, this kind of makes us come full circle here. What are trustworthy avenues for investment? Because here we are trying to be honorable libertarian guys telling folks that a great way to hedge against a disaster is through physical precious metals. Even though we have the facts on our side, the criminals run the paradigm. So we continue to be punished regardless of how right we are. And that's why I guess we all need to take a page from Rory's book and just look at this as just literally a gift. If you take the long view, we're maybe in the beginning of the third quarter of a football game, and if you take the long view, Rory's view is correct.
And what I've been able to do, and I did not get in at sub 1,000 gold. I did not get in at sub $15. I got in gold around 1,400. I got in silver in the mid 30s, and I'm not crying. I'm ecstatic because over the course of time, just as you have advocated and I've advocated for several years now, dollar cost averaging, and dollar cost averaging has taken almost $10 an ounce off of my cost.
That's
period.
Great. That's great because you didn't go all in at 35.
Correct.
You wade into the pool and then you've continued to weigh in. Okay, that's great.
And so as far as what's happening right now, what's happening right now, literally today, is that I'm going to be able to knock more of my cost down, period. And I didn't get into this for a short-term investment. I did not get into this as an investment, period. Anyone that did, if you were playing a stock market, pump and dump, then I'm sorry. That's not what it's about. Because gold and silver are money. And as money, I take my fiat currency and I trade it, I exchange it for actual physical money. And that's one of the things that terrifies these criminal banks, the JP Morgans, the HSBCs, the Citibank, the Wells Fargo, all these criminal entities, these mafia organizations. They don't want us doing that.
Right.
As Rory said, it is a long-term game. And really, the issue is, I don't know if the elitists and the banks, I don't know if they can perpetuate the fiat game forever. If they can, then we're all screwed anyway.
Right.
But if you want to give yourself a chance at keeping your financial situation intact through what's coming at us, the only way to do it is to load up on gold and silver and keep as much of it out of the financial system as you can.
Right.
Which means don't keep it in banks. Don't own GLD and SLV and think that you own gold and silver, or any of those trusts for that matter, except for Sprott.
Yeah.
But even with Sprott, there's a custodian standing between you and the gold and silver that you're entitled to.
Well, and if I could, I just want to circle back and make one last point about that SRS Rocco piece. One of the most quantifiable proofs of this exceptional manipulation of the prices of silver and gold, and silver specifically being held down, is the silver to gold ratio, which after yesterday's raping, I think stands at 67 or 68 ounces of silver for every 1 ounce of gold. We've talked about the mining ratios coming out of planet Earth many times. The real ratio of silver being pulled out of the earth compared to gold in physical form now is closer to 9.5 ounces of silver for every 1 ounce of gold. It's extremely hard to find. And SRS Rocco actually once again comes through with quantifiable evidence of the paper manipulation of Wall Street, because he says from 1986 to 2013, that's a 28-year time span. The silver to gold eagle ratio during that time span was 18 to 1. There were 358.5 million silver eagles, and there were 20.1 million gold eagles, giving us an 18 to 1 silver to gold eagle ratio in the real world, where people are buying the metals. Not the paper fraudulent Wall Street world. In the real world, 18 to 1. That's the demand in the real world. And why that demand doesn't correlate into the real world silver to gold pricing is because of the paper manipulation. That is why. That's quantifiable. It's proof. They've manipulated this ratio to 67 or 68 to 1. And to be honest with you guys, I don't know why. I truly don't know why. I mean, they could still manipulate the price of silver and cap it because they manipulate gold, so they could have that correlation between silver and gold pricing remain, but they could have long ago let this thing go back to more like a 20 to 1 ratio. So we could be talking about silver right now at $60, $70, $80 or whatever it should be at that 20 to 1 ratio. Am I making sense here? I don't know why they've gone to this extreme, Dave. This 67, 68 to 1 ratio is insane.
I think it's because they can. I guess sort of to circle back about the conversation Bill Murphy and I have been having over the last year and a half, we think that for as big a problem as they have with their potential obligations under the gold fractional bullion system, the paper versus the amount of physical outstanding that they have the ability to get their hands on, we think the problem with silver is much bigger. And that's what you're seeing with this extreme manipulation of the silver price and the extreme amount of open interest on the COMEX versus the amount versus where the price of silver is, and also versus the amount of reported silver available to be delivered on the COMEX.
So you think the fraud is just that much worse in the silver market?
Yes.
Yeah, I tend to agree because, again, we saw Forbes not that long ago come out with a story, two separate occasions, 2 weeks apart, so it wasn't a mistake because then they repeated it, that the annual silver market is a $5 trillion market. $5 trillion market. Well, that does not compute at $20 silver, with 1 billion ounces outstanding, at best every year.
He's talking about the paper market, obviously.
Right.
I'll tell you, and I really don't know what to make of this, but to me, the massive removal of silver from the Shanghai Futures Exchange, 90% of it in a very short period of time, to me, that's kind of spooky.
Yeah.
And again, I ever since I've been watching those numbers, and Steve Sanangelo is doing a great job, tracking it and publishing it. And ever since I've been watching that, I just don't know what to make of it. Again, I do think that the supply and demand situation is more extreme in the silver market right now. And also the thing of it is, when India put controls on their gold imports, what happened was silver imports shot through the roof, and their importing of silver has kind of continued. So I think that might be. I don't think anyone doesn't believe that the U.S. was very influential in having India put those gold import controls in place. But one of the things that they created is a probably unintended demand for silver out of India. No. I think that's intensified the supply shortage situation in the market.
Serves them right.
Right. Well, it's just like when they took gold down when they took gold down $200, all of a sudden China's demand went through the roof. And I don't think they anticipated that. And it created problems, that whenever you manipulate a market, this is all through history, you create, problems that are kind of unintended collateral problems that you didn't necessarily anticipate. And I think that's what they're fighting right now.
I don't know what the bottom line is. I guess the bottom line at this point is either you agree with our assessment of the situation or you don't. Either you agree that facts are on our side and that everything we've just spoken about is quantifiable and truthful, and that even though the criminals have manipulated the price and will continue to probably manipulate the price even lower, you have a choice. You can either dollar cost average in and buy some more physical, month to month, every other month, whatever your system is, whatever works for you, or you could maybe throw some money at Alibaba. That's one option. And at a $228 billion market cap after day one, your upside is, maybe it'll go to $1 trillion market cap over the next year. It's possible with the way the stock market only goes up with the help of the criminal central banks weighing in and buying S&P futures, which is now on the record. So maybe I should hit on that, Dave. What are your thoughts on a $228 billion market cap for Alibaba after day one?
I'm so horrified by this whole Alibaba thing. I haven't even really been paying attention to it.
Mm-hmm.
So I didn't even want to watch it trade yesterday because the whole thing just completely disgusts me. I kind of am hoping that kind of marks the top in the markets, which it could, because obviously it's so extraordinarily overvalued at that level. It's incredible. In fact, the whole tech sector has become as overvalued as it was at the peak of the tech bubble.
That's right.
A lot of them are these app companies now that get these stupid multiples that Facebook and Twitter, et cetera, pay for. They just throw money at these things because they have all this cash. They
Mm-hmm.
don't know what to do with it.
Mm-hmm. One of the YouTubers out there, Webb Pollock, kind of hit the nail on the head as far as Alibaba goes, in my mind, and we posted it yesterday. Guys, if you don't know the story of Alibaba and the 40 Thieves, you should reread that or listen to Webb Pollock's version of it as it relates to the IPO of Alibaba, because that's the paradigm in which we live, Alibaba and the 40 Thieves.
That's fantastic. I've been in denial that Alibaba's even happening, but that's just the perfect analogy there.
Yeah, I like that so much I stick it at the top of the page, but I don't think that many people watched it. Our guest has been Dave Kranzler of Investment Research Dynamics, just a straight shooter and a great guy. Dave, anything on the horizon that we should know about, or do you want to just tell folks about your website?
Investment Research Dynamics originally started out as the Golden Truth, and essentially what I try to do is blow away the Orwellian smoke around all the news and events that happen out there. The propaganda in this country has just become so extreme, so I try to weed through that, and just sort of in the middle of this year, I started offering research reports. My avocation is the housing industry, which really since the early 2000s, the housing market's been, to me, it's been extraordinarily overvalued, and it's been a product of all the money Greenspan started printing, and then Bernanke, passed the torch to Bernanke. So, and it's shown up in the housing market, and it's really shown up in the values of these home builders. So, right now I have 3 reports up there that explain and show how these home builders are overvalued. And not only that, I've found several areas in their accounting where their accounting is borderline fraudulent. It's certainly misleading, and I go through in detail and show how they use this misleading accounting to make their earnings look better. But the bottom line is, even as reported, the PE ratios for these home builder stocks is like multiples higher than it's ever been in history, including at the top of the housing bubble the first time around. So those are on my website, and I'm probably going to start putting a few more sort of special situation reports. Like I've always wanted to tackle Amazon and go. I've looked at the accounting many times, and that's just another. To me, that's the poster child of what a Ponzi scheme our whole system is. they don't make money. Their business does not make money. And that's the astounding thing about Amazon.
Well, then we've sort of come full circle, because it's my understanding that Alibaba is the Chinese Amazon.
Again, I've been kind of in denial that our markets would allow something like Alibaba to ever come public. And it's been just such a three-ring circus spectacle that I'm probably going to go. I'm going to go watch that video that's on your website when we're done here, because that sounds really interesting, and I'll probably learn more from that video than I know at all about Alibaba. I just know that it's extraordinarily overvalued.
Here, I'll try to find the name of that for you. Alibaba. Oh, it is. It's 22 hours ago we posted that. It's called, if you just search SGT report, Alibaba IPO and the 40 Thieves. It's a 3-minute video, nice and short.
I can't wait to watch it.
Alibaba IPO and the 40 Thieves. All right. Well, guys, thanks so much for listening. And Dave, thanks so much for joining us. We sure do appreciate it.
Thanks for having me. It's always a pleasure. I love talking to you guys.
Oh, I really appreciate your time. And Rory, it's always it's great for us to reconnect. Rory and I haven't spoken on a call together in several weeks.
Yes, way too long.
Way too long. So we'll get back on the horse again and make these weekly, hopefully. And Rory, thanks for all you do. And you guys can check out Rory's website, which is
thedailycoin.org.
thedailycoin.org. And as I said, I'm going to try to take a page out of Rory's handbook and just be excited about it.
It's time to back up the truck.
I would just offer up, and I mean, Rory's got the right idea here. He's 100% correct. So Rory has the right idea on that. But I will just say, I do think we're going to see light at the end of the tunnel, because I think after yesterday, everyone's in so much despair, and to me, that's usually the signal of a market bottom.
All right. Well, hopefully. We've been talking about a bottom for a very long time. They keep finding a new bottom. So anyway, we beat this thing to death, and we sure do appreciate everybody hanging out with us. We also appreciate you visiting us at SGT Report, the Daily Coin, Investment Research Dynamics, and the Liberty Mill. Have a super week ahead. We love you guys. Thanks for listening.